Hello everyone and welcome into the channel. My name is Brent and in today's video we are going to be doing our M1 Finance stock market portfolio recap of the week. We're going to go ahead and be taking a look at the 23rd to the 27th of May 2021. In this video we're going to go over four areas. Number one, the overall performance of the portfolio. What's our top three winners, our top three losers? Number two, we're going to go into the weekly performance. How did our portfolio compare to the S&P 500, the Dow Jones, the Nasdaq? Our portfolio hasn't taken as hard of a beating as many of the other indexes. And then number three, what activity did we recently have? What dividends came in? We did make some buys last week. I think on Monday, actually, I think we made 3 buys. We're going to go ahead and go over the 3 companies that we chose to buy in our portfolio. And then number 4, we're going to be updating our dividend income. So based off our last buys, what is the portfolio's new updated dividend income, and go over all of that information here in this video. So if you are brand new to the channel, definitely go down below, hit the red button to subscribe, make it gray, hit the bell to be notified every time we release a brand new video. Select all here when you select the bell, and of course, give this video a thumbs up. It helps out the channel, helps out the video, and of course, I really appreciate it. And we're gonna go ahead and kick it off by jumping into number 1 over on M1 Finance. So jumping over here into M1 Finance, we are taking a look at the overall performance of the portfolio. Our total return still remains pretty good overall. It's at 58.99%. Our market gain had been taking a dip here throughout the last few weeks on months or so, but overall we're really not down a whole lot. If we look at the last quarter, this is where the majority of the losses took place, and we're only down 1.78% over the last quarter versus, we'll take a look at the S&P here shortly. But overall, I've seen a lot of portfolios out there and some pretty deep water. And overall, I'm not red at all. Our market highs in the portfolio was around 44,000, not quite 44,000. So we're only down in total about $1,500 of equity from all-time highs. So that'll all get made up with as our positions, go back up in value over time, or we may still have some more resistance. We may still correct a bit more, and that's completely fine. More opportunity to buy. I like red because red presents opportunity that you wouldn't otherwise have, right? So jumping into our top 3 winners and top 3 losers, Apple, of course, remains number 1, up 249%. ABM Industries, this is one that wasn't even close in second and third place last week, but this week it just seemed to have taken a pop here, up 130%. So I believe last week we had AbbVie and Pfizer being essentially number 2 and 3. And these did pull back here now, 114 and 109. And then our top 3 losers, we did have a lot more red in our portfolio last week. We had Waste Management being red. I believe we had Digital Realty Trust. Take a look at that. That's up really nicely, 16% now. And then, so our worst position remains Clorox, but it is off those all-time lows. IIPR is following right behind it. This one took a beating just very quickly within a couple of weeks. Just went from straight green, 12-15%, to straight red, nearly 30%. Starbucks, coming off those lows. So Starbucks, it's only down 13%, which is $190. All in all, I've been averaging into it. It's a really nice yield of 3+%. Stanley Black & Decker, this is a smaller position, $685. It's one of the companies, if I were to invest in my portfolio again, I don't think, I wouldn't invest in Stanley Black & Decker. Looking at it now, they sell a bunch of tools, they sell mostly products, and if times are tough, this isn't going to be performing very well. So it's just one of those companies that, while the company has been paying out dividends for, I believe, around 52, 53 years, it doesn't have anything on it to kind of go through tough times in itself. So it seems to always, and has been, pretty negative in the portfolio overall. Whereas some of these other companies, they may only do products, but Colgate, for example, has a number of products and that they're essentially, people need their products. People need to go out there and purchase a lot of their products, Hormel Foods as well. People just kind of use their products more often versus, going to the store to buy some tools. So let's go ahead and jump over into number 2. the weekly performance. So here's where we're going to be taking a look at the weekly performance. Our portfolio is up 4.86%. So this in all had a market gain there of nearly 2,000. So $1,956.62. That is a huge gain in the week. And again, if we compare this to the S&P 500 and the other indexes, we can see here the S&P 500 is up 6.58%. So our portfolio didn't perform as much as the S&P 500, up 6.58. The Dow Jones 6.24. The Nasdaq is up 6.84, and the Russell up 6.46. But what my portfolio doesn't have is it hasn't lost this 12.76% in the year, 8.6. Nasdaq, 22.46. So my portfolio, whereas it may not have gained that 6% that it's versus the indexes, it hasn't really lost more than 10% during the sort of downfall in the market. It's probably down around 5 to 7%, I believe, off all-time highs. And yeah, so having a little bit less of a recovery in these positive weeks is pretty good overall. So our top 3 winners of the week and our top 3 losers: JP Morgan, huge bounce back, up 11.87%. So that was one that was on my buy list. Been buying a bit more JP Morgan here. Cisco up 9.74. Apple having a huge recovery. I own this one in this portfolio as well as my Merrill Edge portfolio, up 8.76%. We can see some other positions kind of trailing right behind. Very, very high returns here. It's very rare to see it, but in a market where it's been kind of red the last 5 to 7 weeks, I think the last time we had any green in the market was over 4 weeks ago, right? So I haven't had any green in the markets for about 4 to 5 weeks. And then our worst positions this week, we have Avi, pulling back slightly, Merck pulling back slightly, and that's completely fine. These positions down here have been doing extremely well in the market. So a little bit of pullback, or, not even a pullback at all there, is completely fine right there. So that is number 2, the weekly performance. We can see here, if we take a look at the entire S&P 500, this is over at finviz.com. You take a look at finviz.com, click on the heat map here on the right hand side. You can go to the 1 week selection, and you can see that essentially no matter what you were invested in the market, your portfolio should have done green. It would have been very, very tough in this market to have had red in your portfolio this week, to have been red, right? Overall negative, unless you're invested in some, small miscellaneous companies. But even then, I think a lot of the companies out there did very, very well. And we can see like the big bright ones are consumer cyclical, technology, financials, just basically across the board. Everything was up 4 to 10%, if not more. Like Tesla's up nearly 14.5% there. Microsoft 8.19, and just Nvidia 12.68. I'm looking for, it should be, Netflix should be in here, right? Maybe not. I thought, yeah, Netflix. Okay, Netflix isn't bouncing back as much as I would assume. I thought Netflix would have bounced back a little bit more, but it's only up 4.74% on the week. So interesting right there. So off to number 3. Okay, so we're going to go ahead and click on the activity, and we're going to go over the activity of the week. So we started this week back on the 23rd. On the 23rd, we made 3 buys this past week. What did we buy? We bought $100 of Digital Realty Trust, $100 of Starbucks, and $125.79 of Waste Management. That was all my $325.79 that I had to invest at the time. So I went ahead and purchased it into these 3 companies. I also received 1 dividend from Starbucks here. Starbucks paid me a nice $12.63 in the portfolio. That is the first dividend that I received from Starbucks since I've owned the company. And I recently started buying Starbucks. So every quarter going forward now that I own Starbucks, I'll be paid roughly $12.63 at a minimum. And then as I continue to buy back more shares, this will just increase over the next 3 quarters and on from there. So we're going to go ahead and update our holdings here. So we bought DLR, Starbucks, and Waste Management. So those are the positions that we're going to be updating in our dividend tracker. So we're going to go to number 4, updating our dividend tracker. at trackyourdividends.com. This is a completely free website to use. I'd highly recommend using this website over any of the paid ones, just because it actually does a really good job of showing the change percentages, the profit loss. It also shows you your annual income. If you scroll down here towards the bottom, you can see your expected dividends per month. So at a time, a lot of these were kind of down in the $60 range. This one was up still pretty high every quarter, right? It's pretty nice to kind of see that. My average dividend payout per month is now over $90 on average per month, and we can see the highest is $113. So that is pretty good. Okay, so we're going to go ahead and go through here and update our recently 3 additions here. So we recently added to DLR. So we're going to go ahead and find DLR here. And I'm going to go ahead and bring up my notepad real quick, so I can kind of write these things down here on the side real quick. So we purchased DLR. We now own 12.761 shares of DLR. Our cost basis per share is $140.22. We also added to Starbucks here. So our new shares is 27.1307. Our new cost per share is $84.22. And then the final one that we had added to was Waste Management. And we now own 9.099997 shares of Waste Management with the cost basis of $159.36. So starting over at DLR, let's go ahead and update DLR. And we're going to go ahead and update it. We didn't get a lot more shares, right? We had 11.96. We're now at 12.761. And our cost per share went from 140.76 to now 140.22. So we did reduce our cost basis on DLR. And I didn't see what our annual income was prior to this, but I'm sure you guys will have the ability to go back and kind of see as I've updated it. So I'm going to go ahead and I'll probably put that in a comment as I'm doing this, you know, the before and then once we've updated it after. The next company here we're going to be updating is Starbucks. Let's go look up Starbucks here. This is at 50.51 for the annual, or for the annual income from this company. So we just purchased 2 additional shares. We're at 27.1307, and our cost per share went from 84.80 to 84.20. So we reduced our cost per share there by about 60 cents per share, which is pretty nice. We can also see we increased our annual income from, I believe, $50 to now $53. Short-term memory. And then my last company here that I purchased was Waste Management. This one here, we went from 8 shares to now 9 shares. So we only purchased 1 additional share there, but that's fine. And then we're going to update our share count. And our cost basis here went from 159.87 to 159.36. So on every company that we purchased this past week, we were able to not only increase our annual income, but we were also able to average down our position. So our portfolio yield is a 2.82. Our yield on cost is 3.2. Our annual income is almost at $1,200. It is very close off there, $4 off. It is now at $1,196 of annual income going forward from our portfolio. So that is number 4, the portfolio's dividend income updated. So overall, I believe that the portfolio is doing really well. There's still opportunity out there in the market, so we're definitely going to be continuing to invest and average down. We have $140.29 of buying power. Let me know down in the comment section below, are you guys buying anything out there right now in the market? Are you guys pretty happy to see the market in recovery mode right now? Or are you guys a little bit, not so happy that the market's not falling a bit more? I, of course, always looking for opportunity. I would like the market to kind of pull back. It doesn't have to pull back to, say, 2020, way down here in the 2000s, that $2,500 range for the S&P 500. But hey, if it dropped to about 3,500 or even 3,000, I'd feel pretty happy. I would like to see this thing crash pretty hard. But that's just me. Because I'm in my 30s still. I still got another 30 years or so to, I would even... I'm still working for quite a while and just want to continue to build up my positions and my overall return for the future. So having the market correct now pretty hard would just give me more opportunity right now to just kind of invest a bit more. So that is going to be it from me. Let me know down in the comment section. Once again, if you guys are buying anything, are you guys excited about this market? Not excited about this market? Drop me a comment. I would highly appreciate it. And that is going to be it for me. Again, if you guys have not yet subscribed, go down below, hit the subscribe button to make it great, hit the bell to be notified on all of my notifications, and of course, give this video a thumbs up. I believe that is going to be it. I thank you, and I will see you guys in the next video. Bye-bye.